a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about space stocks which are extremely hot lately, particularly amid all the excitement surrounding SpaceX's IPO. And this is likely to be the biggest IPO of all time. And the Wall Street Journal reported recently that the company is planning to go public on June 12th, and they are targeting up to $80 billion raise, which again, biggest IPO of all time. And the valuation would be about $2 trillion when it goes public. And this would be one of the biggest publicly traded companies as well. So obviously, there's a lot of excitement. And this is not a new company. In fact, Musk had founded SpaceX even before he got involved with Tesla, but now it is his ambition to build data centers in space, which is helping to drive the company's IPO plans. And SpaceX is not the only company which is pursuing these orbital data centers. Google is also working on that concept. And in fact, the journal reported that Google and SpaceX are in talks for the launch of these orbital data centers. And then Blue Origin, Amazon founders Blue Origin, is also in the race. Then many companies contributed to NASA's Artemis 2 mission, and that was an awe-inspiring mission, and they have seen their stock prices surge since that mission. Now, talking a little bit about this investment case for space stocks. So basically, the economics has fundamentally changed because launch costs have fallen by almost 90% over the past 2 decades, and that's driven mainly by reusable rocket technology, which is pioneered by SpaceX. And there's an interesting chart on Venex's website, and they have launched the so you can take a look on this chart and that ETF. So this is just amazing how launch costs have come down over the past 2 decades, and that is why the space economy is now shifting from a government-led economy to commercially driven economy. And according to McKinsey, the global space economy is expected to reach $1.8 trillion by 2034, and that is up from about 13 billion in 2024. And at the same time, investors should remember that this is a risky space. So, probably a small allocation makes a lot of sense, not a huge allocation to this theme. Uh, First of all, execution risk is severe. We all should remember that rockets explode, satellites fail and fall, and timelines can slip by years, if not decades. And this is a highly capital intensive industry, and it involves long development cycles, and which is obviously a difficult combination in a higher interest rate environment. Particularly now we expect inflation to remain sticky, and that may result in higher interest rates. Then valuations have often become detached from fundamentals, and particularly we should remember that many of these companies, small space companies, they went public during the SPAC boom of 2020 and 2021. And after that, those stocks fell 70 to 90% from their peaks. So, obviously, this is a high conviction, long duration, and high volatility investment. And then some of these ETFs, they hold private holdings via special purpose vehicles, or SPV. So there are some risks associated with those SPVs as well. And IPOs, because SpaceX is going public, many other space related stocks may also go public and be included in these ETFs. So investors should remember that trading in newly public companies is often volatile. And with the recent index rule changes, some of the new companies, including SpaceX, they will come to your broad market ETFs very soon. So investors should remember that as well. Now, let's take a look at some of these ETFs. So, there's so many space related ETFs. Some of these launched very recently. UFO, or the Procure Space ETF. This is the first pure play ETF in the space. It is the oldest one, and this launched in 2019 and has 885 million in assets currently. Let's take a look at this ETF by going to the code page on Zacks.com. You can read our research report articles. I, in fact, did a podcast also recently, so you can listen to that podcast using the link on our code page. You can go to UFO web page for this ETF. Rocket Lab, Planet Lab, Viasat, EcoStar, these are the top holdings in this ETF. And in fact, you will see these top holdings in most of these space related ETFs. So, uh, Rocket Lab is a launch provider. Planet Labs is the largest commercial Earth observation constellation operator. So they run hundreds of small satellites. And then there are satellite communication companies like Viasat, EcoStar, and Iridium. Going back to the slide regarding space ETF, so then you will see that ARC has a space and defense innovation ETF, ARKX, that has about 931 million in assets. State Street has Kensho Final Frontier ETF, Rocket. All these ticker symbols are very interesting, and that has about 188 million in assets. This is among the cheapest in the space, but this includes companies related to deep sea exploration as well. So, Final Frontiers is defined as outer space and deep sea. Then this new ETF by Tema Space Innovators ETF, NASA. This has become one of the hottest new space ETFs, and the reason is that this holds SpaceX via a special purpose vehicle, SPV and SPV. So this now has 833 million in assets. It has gathered assets very quickly. And then there is Mars by Roundhill, ORBX by GlobalX, WARP by Vanak, which I referred to earlier, and there's one more uh, by Corgi, DIPR, Dipper as well. Now, we cannot show all these ETFs, there's just too many. So let me talk a little bit about by Tema and by GlobalX. So Tema, again, you can use the link and go to this website, Tema website for the NASA ETF. So as I mentioned, this holds exposure to SpaceX via an SPV, special purpose vehicle. So I'm not a fan of these SPVs because there are complexities and potentially high fees, opacity tied to these SPV. So NASA clarified that their SPV is a captable SPV which charges 0% management fee and 0% performance fee. But I just believe that investors are better off avoiding ETFs that gain exposure through SPVs. And then for any private holding, heavy inflows can impact the weight. In fact, I remember when this ETF launched, the SPV exposure, SpaceX exposure via SPV was about 11%. And obviously, because the ETF has gathered assets so quickly, so that is why the weight of that SPV and SpaceX exposure has now come down to less than 7%. And then you should also read the details how it is investing in that SPV and what happens to the SPV when SpaceX goes public. So there would be a lockup period of at least 6 months. This is what investors should take into account. And as I mentioned earlier, SpaceX and other uh, highly anticipated IPOs, they will land in your broad market ETFs very soon. I should add that UFO has also announced an index rule change, and they will be adding SpaceX soon after it goes public, maybe within a day or two. Then let's quickly look at the Global X ETF, sorry, the Roundhill ETF, Mars, which has similar holdings, Rocket Lab, EchoStar, and AST Space Mobile in the top holdings. Thanks for watching. Make sure to check out zax.com/promo for an interesting offer. Make sure to subscribe to our YouTube video channel so that you do not miss anything. And I will see you next week.